Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 4 days it's been very choppy for the Australian dollar. Since the attempt on the top side at 75.25.35 has been rejected now for the fourth consecutive day, and also, or more to the point, the third rejection. Of course, the market is now possibly weakening into the European session, with bearish divergence clearly evident here. The market may possibly now pull back towards a region of anywhere to 74.50 to about 74.30. In light of the pattern here, we could see this market even drop lower, but first of all, let's see how we play into the European session and if the weakness continues. A clear break of the level of 75.25.35 looks towards 75.60. While eyes look to the US job numbers this Friday, the euro has taken a very positive stance into it, as we see the market rebounded in front of the level of 109.30 and now tackling this level around 111.15.25. A break of, or close more to the fact, above 111.15, as we are near enough broken above it now, would see further risk up towards 111.70. In light of the US dollar, which measures the greenback strength against a basket of 6 major currencies, that has actually broken down and is currently around 98.50. The dollar yen still remains somewhat weak since rejecting the 7-year highs around 125. Now looking at the level of 121.60, a close under there of New York would give further indication to the downside and possibly down to the low 120 region as the longs start to bow after the rejection, and the 2 heavy negative candles has put the bearish spin into this market, and especially with the RSI plummeting. So therefore, break under or close of 121.60, because we have broken it, of course, the low being 121.30. Give further indication down to 120. I like this pattern when it comes to sterling, because the market did take a few weekdays into this decline that has now respected the level of 130. With the long-legged doji in place, I feel there's a rebound coming and therefore could see a move back up towards the 132 to 133 area if this pattern holds. Disappointing to see that the sterling Kiwi stab at that top side of 190, 40, 50 area sent the bulls running. However, let's see how we play into London. The divergence is still a little bit there and therefore could see another retest of that top side. Finishing up with oil and gold, well, the market has posted a hammer when it comes to gold, but nevertheless the technicals are still heavy. Although we did stab at the level of 1,900, I feel the market may take this level out and look down towards 1,870. And oil stabbed at the level of $103 a barrel, but didn't get quite the weakness that supported further case downwards. Nevertheless, we haven't got quite out of that bearish sentiment and could see another down test. If we see a clear break of 103, I'm going to give you a call down towards the 92 area, as these last 2 candles there could easily be taken out or erased if we see the break close under 103 and a possible continuation to the downside. Well, that wraps it for the day. Thank you very much for joining me, and please keep an eye out for the intraday report. I hope you enjoy the rest of the day.